I asked the question, how has the system stood up to this test? And when it came both to the dealing with the medical emergency and to the economic and the social impact, how has it responded? I think you can say that the system has not collapsed, and individual institutions have managed to deliver meaningful responses, but is it strong enough to cope with what we have in front of us in terms of economic, social, political impact? Will it be strong enough to deliver vaccines to everybody around the world? And can we say that the system is really functioning as a system? I think these are some of the questions we will talk about tonight. The OECD report points to a tendency towards what they call a la carte multilateral, that individual donors push their specific agendas, and in that way sort of undermines the accountability of the multilateral system as a whole, transferring control to a group of large donors. The report also expresses concerns that the multilateral system as a whole will not be able to generate sufficient funding. I think that's something that we should talk about tonight as well. We know that already the resources of these institutions are stressed. And the report also points to some research which I think we should take into account, that when you compare multilateral institutions and bilateral institutions, that actually the multilateral institutions perform better on almost all dimensions, and in particular it has stronger specialized skills, make more use of government channels, and in that way trains and educates and makes government function better. It's more effective in reaching fragile environments. So we should think about these issues when we talk about the division of labor between multilateral and bilateral institutions. And the OECD report ends with, I think, a very important remark that, as we try to build back better our economies, and we should also think how we can build back better the existing multilateral aid architecture. So with those initial words, I wanted to set the stage for the discussion tonight. So we have an absolutely fantastic panel to discuss these issues, and I will introduce the speakers as I give them the floor, but they have all worked at the highest levels of government and represent different perspectives on these issues. So after they have presented their initial remarks, we will invite the audience to pose questions, and you can do so on the Q&A and by raising your hand. So without further ado, I wanted to give the floor to Tharman Shanmugaratnam, the former Deputy Prime Minister, now Senior Minister of Singapore. He led the G20 Eminent Persons Group for Global Financial Governance. Probably this is the most ambitious process of rethinking the global financial system that was ever undertaken, by looking at the entire system, not only the development architecture, or not only the financial safety net, but putting them together. As he's still very much engaged in building support for the systemic approach that the Eminent Persons Group took, and for the specific proposals it made. So, Mr. Minister, please, the floor is yours.
Thank you, Eric. Thank you to the OECD, CPR, LSE and AIIB for bringing us together. Thank you for inviting me to join you especially. Let me start by way of preamble to just say that we have to recognize both the scale as well as the urgency of the situation we face. And it's not merely about what type of recovery we're going to see, whether it's L-shaped or U-shaped or V-shaped. We have to realize that the setback this year alone is not just a short-term setback, but it places us on a new trajectory going forward. All previous crises, including the global financial crisis, show that it takes a long time to recover from the setback in levels of output and employment, even if you have a resumption of growth subsequently. And this is particularly important in the developing world, particularly the young developing world, because it is levels of output that we need to regain in order to generate the jobs required for a large youthful demographic. And if we don't see urgent, scaled up action in the next 1 to 2 years, we are going to face a very serious economic, social, and global political problem in the next decade. The next 2 years are critical for the next decade and beyond. I think it is uncontentious to recognize that the scale of financing that is now required for the developing world, both the low income, lower middle, and middle income countries, is now much larger than we would have envisaged even a year ago, let alone what we have seen over the last decade or two. We now need a much larger scale of financing. It'll require domestic reforms and domestic revenue systems to be improved, but those things cannot be done quickly. And secondly, from a counter-cyclical point of view, this is not the best time for governments to be raising more revenues. You can plug leakages, but you shouldn't be raising taxes at this point. There can be efforts to develop domestic capital markets and to mobilize savings better. Again, that takes time. That's a longer-term journey which many countries are on, and I think the MDBs have been playing a very useful role in facilitating. But there's no beating around the main issue, which is that we need a much larger scale of external financing for the developing world, and we have to treat this as a matter of urgency. The net new financing needs are very large compared to what we've seen before. The MDBs have more potential than has been realized so far. They have a tremendous multiplicative potential. And we have to see over the next 2 years how we can firstly increase the amount of resources available to the MDBs. Secondly, allow for those resources to be multiplied and deployed in a more coordinated and in a much tighter fashion. So it's more resources, better multiplication of resources, but very importantly, deploying resources in a coordinated fashion so that the comparative advantages of the different institutions, and highlighted in the OECD report as well, quite apart from being a major theme of the G20 Eminent Persons Group report, this ability to leverage on comparative advantages and different skill advantages of the different MDBs is a major opportunity. I think the capital issue, when you look at it realistically, does not involve numbers that major shareholders should balk at. The amount of resources required to replenish capital in the MDB system as a whole, it doesn't apply equally to all the MDBs, but if you take the system as a whole and look at the scale of new net financing required for the developing world, the amount of resources we need to replenish in the MDBs is very, very small compared to the resources being deployed domestically in each of the economies of the major and even moderately sized shareholders. So we're not talking about huge amounts of money. This is actually a feasible plan. Secondly, we are making some progress in better coordination between the MDBs. We weren't starting from scratch. There's been work over the last several years, and even work on the country platforms recommendations of the G20 EPG report has been progressing under the Japanese and Saudi presidencies. The G20 doesn't change the world overnight, but they've been making good progress. But very importantly, we have to think about private investment. And that means not only using MDB resources to catalyze private investment rather than to lend those resources outright on the MDB's balance sheets. In other words, using loan loss guarantees, using a variety of ways of mitigating risk for the private sector. But it also means tapping on the very large quantum of institutional investor funds in the system and developing an asset class. This is not new. We've been talking about this for some time. It is entirely doable. Developing synthetic asset classes of developing country infrastructure, with underlying assets being developing country infrastructure, but sufficiently diversified, sufficiently simple, and on a scale that will attract the institutional investor class, which is very large. I do want to emphasize that the next year may very well see some major corrections in asset values in the largest capital markets of the world. If you talk to seasoned long-term investors, most of them have as at least one scenario, if not their baseline scenario, a major correction in markets. And that's going to make it even more difficult to be able to mobilize private institutional investor capital. We've got to find ways of mitigating risk in the developing world, simplifying the financial instruments that are available for them in order to attract the required financing. So just remember, risk aversion may very well go up in the next year. Do not treat the current lull or the fact that we have had no catastrophe in the developing world so far. We shouldn't be complacent as a result of that. The Lehman Brothers collapsed more than a year after Bear Stearns collapsed. Be very wary about lulls in global financial markets and use the lulls to fortify resources and to build resilience. Don't take chances on this. I do want to say as well that besides more capital, better multiplication of capital to attract private investment, we also, and also better complementarity between the MDBs, we have to think about the capital and leverage policies of the MDBs themselves, and talking about them now collectively rather than individually. Basically, capital policy is too conservative in the MDB world, and it's partly a result of the credit rating agencies' norms. It's not hard science. In fact, it's largely been just norms and practices. And I think there's a strong case for the MDBs together to approach the issue based on the data available, on past default rates, based on the special peculiar features of the MDBs as having preferred creditor status, to really engage in a discussion with the credit rating agencies so that we can again multiply capital more effectively. Debt restructuring is an issue which has to be on the table, quite going well beyond the DSSI, which was, I think, an initial and a temporary initiative, not something that's going to change long-term growth prospects at all. We have to think very seriously about debt restructuring. And there, the MDBs, again, may need to be creative. I can fully understand why the MDBs do not participate directly in debt restructuring exercises. But there may be ways in which the MDBs could use their balance sheets to mitigate risk for private sector creditors when they are debt restructuring exercises. In other words, to provide some forms of guarantees on future payments by developing country borrowers to private creditors. We have to be creative, but frankly, if you look at what's being done domestically in a whole range of countries, if you look at the advanced countries, they have not just been creative, but they pulled out all the stops and changed all the basic principles, both in fiscal and monetary policy. So modest innovations in MDB financing, in MDB risk mitigation of the private sector, modest innovations can go a long way. Finally, I hope COVID has made global shareholders more aware of the importance of the global commons. It's stark what has happened. What has happened was not unpredictable. In fact, it wasn't just predictable, but there were predictions, not necessarily coronavirus, but there were predictions of a major new pandemic, and it may well be that the really big one hasn't yet come. The scientists have to be taken seriously, and it is not just fancy intellectual thinking, but there's a lot of hard science pointing to the fact that we're going to get a recurrence of pandemics or outbreaks of infectious diseases on a global scale in the years to come. And we have to think very seriously of how we can fortify the global commons in health, in education as well, which is a greatly neglected area, and of course, on everything to do with climate and the ecological crisis the world is facing. So I'll stop there. I'm sorry I've spoken for too long, but I thought I'll just lay out the broad issues before us.
Well, thank you very much, and thank you for emphasizing the gravity of the situation and the urgency of what we have to do, and pointing to various options that we have in mobilizing the system and also getting private and particularly institutional capital into development, and also for warning us not to take this lull with complacency and rather use it as a time to build the defenses. Thank you very much. So the next speaker is my boss, President Jin Lichin. He's been leading the AIB since its start. And AIB, of course, is a newcomer among the multilateral development banks. It was created very much to try to learn from the lessons from previous or from existing institutions. President Jin has a long career as an official in the Ministry of Finance in China, but he's also worked in the World Bank, in the Asian Development Bank. He served as chairman of the China Investment Corporation and later at the China International Capital Corporation. As I said, I have the pleasure of working with President Jin now, but for this purpose tonight, I'm sitting in a separate office to protect my independence as a moderator. But seriously, President Jin, the floor is yours.
Thank you, Eric. Thank you very much. And Tommen, very nice to see you. It's a long time, as we said, almost more than a year now. But thank you very much for your comments, thoughtful ideas on a number of issues facing the world today. Let me share with you briefly our thoughts about the multilateralism, the governance, and the cooperation among all of the MDBs. I would say the COVID-19 pandemic is a litmus test to the AIB, which is barely 4 years into operation at the time when the COVID-19 broke out. The bank is based on the principle of multilateralism, and we started from the 57 founding members. Now there are 103 members, and more than 80 countries have ratified the Articles Agreement. The latest is Brazil. Brazil was a little bit late because of domestic issues, but finally it's a member now. And we have members from across the world, North America, South America, Africa, Asia, Central Asia, and also Europe. So we are truly a multilateral institution. I would say this bank was initiated by China, and there was lots of skepticism about Chinese intention of creating such a bank. For this to be a bank dominated by China, interested in carrying out its mission of international influence, or it is dedicated to improve the multilateralism, to strengthen the international financial economic system and governance. I'm pleased to say that now, before we reach the end of the first 5 years, I think more and more countries recognize AIB is truly a multilateral institution. And its governance is based on experience of the existing MDBs, but also with its new creative feature. And during the pandemic time, we have very good cooperation with other MDBs, so that with combined resources, the MDBs could make a difference in controlling the pandemic. So we are very pleased to have an opportunity to work with other MDBs, IFIs, and also the private sector. The current situation alerted us to the risk of focusing exclusively on physical infrastructure to the neglect of social infrastructure. and healthcare turns out to be the weakest link in the production chain of the economy. So we would like to pay attention to the development of healthcare sector, or we call it social infrastructure sector, moving forward. And there should be a proper balance between the physical infrastructure development and social infrastructure. As you see, healthcare is such an important part of the economy. When we see the train service, the airline service, and all those entertainment services are almost deserted, but you will find how important it is to make sure we should be able to deal with the healthcare problems. Otherwise, all these physical infrastructures built would be simply useless. It takes a little bit time for people to reach consensus on this issue. Some people interpret the mandate of this bank in a very narrow sense. They say, well, the bank is to promote connectivity, infrastructure. But I say, but if you look at because I was involved in the drafting of Articles of Agreement from day one. So actually, I was the one who added very important concept in the mandate of this bank. The mandate is to promote broad-based economic and social development through investment in infrastructure and other productive sectors. At the time when we tried to prepare the Articles of Agreement, some people asked me the question, Mr. Jin, what do you mean by other productive sectors? We are supposed to finance infrastructure, connectivity. And my answer is, other productive sectors means other productive sectors. So we leave a very broad scope for the bank's operations. Now it turns out that this is truly very important. I think what matters is the balance. How should we allocate appropriate amount of resources to social infrastructure? And also at the time when we negotiated the Articles of Agreement, we talked about IT, but probably digital economy did not feature prominently in those days. And now we all understand digital economy is so important for us. At the time, climate change was certainly a major concern for international community. But 4 years later, and as you know, the bank was set up right after the Paris Agreement was agreed upon. So the sense of awareness of climate change was there. However, the urgency of dealing with climate change was getting more and more serious. So my view is that climate change, drastic weather, and all this environmental degradation may combine to create the breeding ground for bacteria and viruses. While there's no scientific evidence suggesting the close link between climate change and viruses, we have a reason to believe that drastic weather, environmental degradation, disorder of ecosystem are bad for healthcare, for the human beings. And there's lots of evidence indicating the linkage between the animals, other species, and humans, the so-called zoonotic kind of play. So we believe it's very much important for us to deal with climate change. And when we draft the corporate strategy, which was approved by the board not long ago, we indicated the bank will aim at achieving 50% of the financing for climate by 2025. So this is very much ambitious program, but we are very much encouraged to hear that Chinese President Xi Jinping declared that China would peak out in carbon emission by 2030 and achieve carbon neutrality by 2060, 10 years after the European countries, OECD countries. So the bank is now working very closely with the other MDBs, governments, private sector to deal with the COVID-19. But once the COVID-19 is brought under control, we will go back to the normal mainstream business. But still, certain amount of resources will be devoted to digital economy, healthcare, and education. Not the general education, but education which would help the younger people to fit into the new labor market when AI would be playing a more important role. Tommy, you refer to the risk aversion issue. I know this is the time when the private sector is really very much risk averse, and almost for during each decade cycle, 1997, 2008, and every 10 years when we were faced with the financial crisis, economic crisis, the private sector also would bear the brunt and suffer losses. So this time, I think the big issue faced by the private sector is different from the normal business cycle, because normal business cycle economists would not find it very difficult with the data to calculate how soon the economies would be moving out of the woods. This time, it's not so, because this is not part of the normal business cycle. You cannot make very precise predictions about the recovery of the economies unless you know when COVID-19 pandemic could be brought under control. If it's uncertain, if there's no availability of safe and effective vaccine, this is going to trouble the world economy on and on and on. So the issue faced by the economists is not an economic issue. It's really very complicated social issue. That is why it's very hard for us to predict when we can go back to the normal businesses. But our idea is as soon as we are back to normal, we will go back to our mainstream business of physical infrastructure investment, but we'll also allocate sufficient amount of resources for social infrastructure. Let me stop here. Thank you very much.
Thank you very much, and thank you for emphasizing the multilateral nature of AIB, its increasing importance that you attach to social infrastructure and particularly to health. And I think this is something that comes very much out of course, the lessons from COVID and these connections between infrastructures of different types. Very much important to remember. So thank you for that. The next speaker is Ksenia Yudaiva. She's the first deputy governor of the Central Bank of Russia. She joined the ministry or the central bank from having worked in the presidential administration, was central to the G20 presidency of Russia and played a key role in making that a success. She has also been in the Ministry of Economic Development and worked in research and think tanks. So thank you very much, Ksenia. Please, the floor is yours.
Well, thank you very much, Eric. Let me speak about somewhat different topic because as I represent the central bank, so I'll speak about topics which concern central banks, and maybe we'll see some links between what challenges for the central banks and MDBs. And of course, there were many challenges this year. It's definitely health challenge, economic, but financial stability is also one of the most important challenges of this year. We all remember huge market volatility back in March. Now it seems to be the second wave, maybe not that topic so far, but definitely we see that volatility is rising on the financial markets. Basically, what we see is that it's change in the market architecture in the last 10 years. This shift from banks, which actually became more stable after all the reforms, toward asset managers of various kind, made markets somewhat more fragile. But at the same time, central banks do not have or cannot use traditional lender of last resort tools to stabilize the system. So we see more and more interventions of central banks in different areas. Look at the Fed. Fed announced a number of new instruments of basically direct interventions on the markets, on primary markets rather than secondary markets. If we look on the emerging markets, there are more and more talks about QEs on emerging markets, which is interventions on government bond markets and sometimes other markets as well. And so far, it mostly concerns liquidity issues, but further ahead, we will probably see more solvency issues, and it's still unclear how the system will work when we approach that stage. What worries me is that on the one hand, we see these huge interventions by the central banks, and well, as a central bank, I'm also worried that we, in one way or another, see a revival of central bank financing of governments. While some forms of QEs look this way, and we already saw outright examples of this. So this idea is, well, it's not yet getting more and more popular, but it's not anymore considered as a taboo. Right, that central bank cannot directly finance governments, and not on, and it's in different types of countries. On the other hand, if we look on the on how countries use a global safety net, we will see a very interesting picture. Well, at the very beginning, when there were all those liquidity problems, some emerging countries, emerging market countries, use Fed swap lines. IMF facilities were used much less, if at all, for those countries who are eligible. Now, IMF, of course, distributed a significant amount of money to a large number of countries, but among them, well, with the exception of Argentina, you won't see any single kind of relatively large or important emerging market countries. These are usually poorer countries than core emerging market countries. Emerging market countries usually look for domestic financing, and those of them, of course, who have a more developed domestic financial markets, they were able to finance their need domestically. But again, as I say, this idea of central bank financing is seem to be floating in the air. To my mind, this basically means that this whole global risk sharing scheme does not work to the extent where it should work, probably. And maybe there is a bigger place, a big role here for MDBs. I understand that many MDBs, of course, now are very active, right, in this area. Maybe there is a bigger role for them. Maybe we should think about sort of changing role of other of the core institutions like the IMF as well. But the system seems right now multiply financial stability risks. in some cases. And these significant financial stability risks, they prevent government abilities to solve the economic problem. And this is a deficiency of the system which we probably need to think how to address in the future. Thank you.
Thank you very much, Senja. Thank you for bringing out financial stability. We know that the financial crisis can quickly lose many decades or at least many years of development achievements, and you point some of these risks. And of course, many of us have been surprised how markets have tolerated some of these, or have even welcomed some of these sort of non-orthodox monetary policies in emerging and developing economies. So there are a lot of question marks out there, to what extent this is sustainable or not. So thank you for bringing that up. The last, but by no means least, speaker is Arvind Subramanian. He very recently resigned from his post as Chief Economic Advisor to the Indian government. He has a long career as an economist at the IMF, and a strong interest not only in his own country's economy, but also in that of China and in the global economic system, have contributed in many ways to the international thinking about the global system. So please, Arvind, the floor is yours.
Yeah, Eric, first of all, thank you very much for inviting me, to CEPR and LSC for inviting me. And of course, it's such a great privilege to be on such a distinguished panel with my friend Tharman and President Jin and Ksenia. I think we've had a set of very, very thoughtful presentations. Tharman laid out the need for urgency. President Jin spoke about the terrific contribution that AIIB is making, and we also heard about the challenges of central banks. I want to step back from all of this and kind of take a slightly big picture view, a more candid, a more stark, and I'm very sorry, I want to apologize in advance for a much more grim and pessimistic assessment of where we are today. So I'm going to be a kind of party spoiler, and I apologize in advance for that. So let's just, I think, honestly and realistically take stock of, how we got here. And let me kind of compress the history to begin by saying there was a kind of status quo ante, which I think is reflected in Tharman's G20 EPG report. And basically, the history compressed is as follows, that, we had a period where, the West was doing very well, and then from about, 70s, 80s onward, the rest, especially in East Asia, developing countries were rising. And then, especially China. And then what happened was, in some ways, the Western donors committed the original sin of not adapting the West-led institutions, the World Bank, IMF, MDBs, did not adapt it commensurate with the rise of the East Asian countries, commensurate with the changing economic realities. So that was the heart of the problem going back, whether it was quota, voice, governance, etc. We had the same leaders from the same bunch of countries and the same institutions, very little real accommodation of the changing economic realities. The West did not respond very well to the rise of the rest, and that was the original sin. Then what happened, of course, was the rising hegemon, China, responded as you would expect any hegemon to respond. It created a set of new institutions, mostly in the development sphere, not quite, in the IMF emergency liquidity sphere. And so, we saw the BRI, we saw the AIIB, the new development bank. And so a new a set of institutions were created. And to be honest, the West participated with a kind of a range of response from enthusiasm on the part of some to very reluctant tolerance, acquiescence on the part of the other. So that's where we were. We had the original sin, we had the response of China, and in a sense, that was the status quo ante, which is reflected in Tharman's G20 report. Essentially, we went from a monopoly of this whole international financial institutions to a kind of competition, a kind of desirable competition, and then with kind of some exhortations of, we must all cooperate, it must be coherent, etc., etc. So that was the kind of status quo model, from monopoly to a kind of competition in this sphere of providing this global public good of finance, development finance, emergency liquidity, etc., etc. But the point is, and this is the crux of what I'm going to say, the world changed. The competition model, I think, was not a bad model, and it could work in good times because borrowers could then shop around. Should I go to the bank? Oh my God, they have these onerous procedures. Let me go to the AIIB. And there was this almost desirable competition, which I think you could argue benefited borrowers in some sense. The AIIB, BRI focused, they had this expertise building infrastructure. World Bank did something else. They had better government procurement practices maybe, and so this kind of competition model, kind of was where we were. Then COVID hit, and what it demonstrated, I think what the COVID crisis demonstrates, is that this model of going from monopoly to competition cannot really work. It cannot really work for two reasons. One, in the good times, you have this competition, but in the bad times, you require, debt write-offs, reductions, basically burden sharing amongst the creditors. And, now there are a whole bunch of creditors, and that burden sharing requires cooperation, a lot of cooperation between new, multiple, varied actors, multilateral, bilateral, official, private, etc. So point number one is that the competition model can work for the good times. I think in the bad times, it cannot work or hasn't worked so far. The second big reason why it can't work, I think, and we really have to come to grips with this when we think about cooperation going forward, is that we don't have the old, G2 world where there are two, hegemons who are kind of providing global public goods, who are kind of cooperating with each other. And I'm going to be a little provocative here and say we're almost not in a G2 world, but in a G-2 world where cooperation is going to become very, very difficult. So we're in bad times where you need more cooperation on burden sharing, debt write-offs, etc., etc. But that cooperation, because of this new geopolitical world that we're in, is going to be much more difficult than before. Now, let me just elaborate on the bad times. I think we know, and I think Tharman made this point very well, and President Jin as well, that the poorer countries are going to require flow relief and probably a lot of stock relief as well. So, in a sense, I think we have to come to grips with the fact that the whole, even if you look at debt export ratios for a large bunch of developing countries, they have started moving adversely, not just post-COVID, but post-global financial crisis, as commodity prices came down, as the world started slowing down, exports declined, deglobalization happened. So the outlook started deteriorating even before COVID. And now, of course, COVID, as several of you pointed out, is going to, the magnitude that's going to be required, not just flow relief, but also stock relief, whatever debt write-offs, it's going to be huge. I think it's fair to say that so far, the multilaterals, I think, have only made a very modest contribution, whether it's the G20 or the World Bank. There's the paper by Justin Sandefur and Scott Morris, which shows that the World Bank even relative to its own targets for COVID, is falling far short. The IMF has done something, but I think it's not really been tested. I think if Carmen and others are right about defaults coming in the future, I think the whole system, including the IMF, is going to be tested. So that's on the multilateral front. On the bilateral front, it's not clear to me that China has come out looking very good either on the bilaterals. I can't say for sure. We can't say for sure. But I think whether there have actually been write-offs, reductions, how much we just don't know. But one doesn't get the sense that in the bad times, the bilaterals have been terribly responsive either. Now the point is that the competition model, basically what it did was it created many more actors, in this development lending space. We have the private sector, we have China bilateral, we have other multilaterals of AIIB. And the truth is, there is no mechanism of any sort of burden sharing. There's not even a shred of convergence on the need for this cooperation, let alone principles. And we don't even know the magnitudes involved. We don't know, for example, what all the bilateral debt is from many of the major official creditors, including China. So in a sense, the kind of burden sharing in bad times is a bit of a mess, really, if we're honest about this. Now we come to the G-2 world. So we need more cooperation, but the world has become a less cooperative place. I mean, this is not the time to go into what the two hegemons are doing. I think we know what's been happening in the last few years in the United States. I mean, this is not a country, a hegemon that's supplying the Charlie Kindleberger goods. More finance, more open markets, more cooperation. In the last few years, the US has been doing exactly the opposite. So that's why. And the puzzle for me is China as well. I think it had a historic opportunity to fill the kind of leadership vacuum of the West, but it's not clear that that is happening. I wrote a piece saying the soft power that China was rightly trying to accumulate with the BRI, with the AIIB, and so on. It's not clear what they have done in the bad times in terms of debt reduction, debt write-offs, less onerous terms of borrowing. I think it's an open question. And I also felt that China could have done much more in terms of actually using its reserves to provide emergency liquidity, kind of to almost compete with or complement, the IMF and central banks. So I think when we step back and look at the geopolitical scene, I think today cooperation is a complete very, very difficult situation we're in. So I think looking ahead, the hope is, can we go back to kind of the status quo ante, in a post-Trump world, where the climate for cooperation becomes better. Clearly, it's possible that with the Biden administration, the US will rejoin the Paris Agreement on climate change. They go back to the WHO. It will remove some of the restrictions on immigration and trade, and then we can think about a better cooperation, a better climate for cooperation globally. But a part of me hopes that will happen, but the truth is I have no confidence, because I think the status quo that underlay even the G20 report of Carmen seems to be a little bit out of date and untenable, because broadly I don't think the China-US rivalry is going away. I think attitudes towards China, for right or wrong, are hardening across the world, and we've seen the latest Pew survey. So I just see an international system that's going to be highly unstable, highly uncooperative, and highly conflict-prone. And the truth is, there is no committee to save the world, and I really, really sad to say, I don't see one emerging in the near future, given the broader geopolitical climate we're in, and given all that we've seen so far. So with apologies for being dark and gloomy, let me conclude on that note.
Thank you very much, Arvind. This is a very fair, I think, challenge to the kind of complacency that we might be lulled into by talking about the need for a system to work more as a system, and there are these fundamental tension in the system and between key players in the system. And I very much agree with you that in bad times this competition model doesn't work, and I even question that it's very healthy in good times, because we are, as we said from the very beginning, these are institutions that are owned more or less by the same shareholders, the same taxpayers are paying for this. Is that really, are we going to compete? What are we competing against? So I think there are some very fundamental questions. So I'm going to now, I think what you said now, I think we should get some responses from the rest of the panelists, because I think it is a challenge to what was said earlier. I was going to bring in a student, actually, because this is a tradition we have, and the student happens to have think very much about his question is very much in the spirit of what Arvind was saying. So can I ask Jin Tao Zhu, who's a PPE student from the London School of Economics. Jin Tao, can you ask your question?
Thank you, Eric, and thank you all panelists. So I think my question is on the relation between MDBs and individual countries. So I want to ask the panelists, how do you evaluate the current cooperation between MDBs and individual countries? Are there any existing challenge or gap that stop us from achieving maximum efficiency? Yeah, thank you.
Thank you, Jin Tao. So I think with that question, I'll maybe let Thurman come in, and maybe you can respond to Arvind, and maybe also this issue of the multilateral, bilateral competition and the role of individual countries in these multilateral institutions. Thurman.
Thank you. Let me reflect on what Arvind was saying. I think Arvind was accurately describing the way the world has evolved, the fact that you now have a multiplicity of actors with some fragmentation and some competition involving shareholders. Fundamentally, we have to decide on what process of change is conceivable and achievable. And I would say, if I were to put it academically, we need a theory of change. There is a status quo at every point of time. And the question is how we move from today's status quo, which I think has existed for roughly 10 years or so, to a new, more cooperative international order. And I think, my theory of change and my motivation as a policymaker is to think in terms of transition. And I say this not just rhetorically or because it's a nice way of putting it. I say it very seriously because we have only three alternatives, you see. One alternative is wait for things to play out so that the rebalancing of global influence is given time to settle into a new equilibrium. Unfortunately, that takes a long time. Existing hegemons do not fade quickly. They fade slowly, they fade stubbornly, before finally accepting a new equilibrium with new emerging powers. That's been history written all through the last century. And certainly, there's nothing in current day geopolitics which suggests that it's going to be achieve faster. It's contestation, it's both competition and collaboration, but it's a messy business. It's going to take time, and we cannot afford to wait, because the demographics and the developing needs of the developing world have an urgency that even those of us, even those who are not in a policy actor role, have, from a humanistic point of view, have to accept that, look, we have to move this quickly. And we can't wait for the geopolitics to adjust and for better minds and better wisdom to emerge. Second, so it's
Hello, Andrea, can you hear me? Hope you're enjoying the week. Okay. Did you get a cold? Are you? I'm guessing you're not going to join us tomorrow for the week that Sasha is. Are you coming tomorrow? Oh, you are. Oh, okay. What's your plan for reading week? Ah, okay. So I go visit them? Oh, nice. Nice. Mm-hmm. Are they also in London or are they like else? Oh, okay. I guess you must be close to them. Yeah, I think I'm in the same situation as you. I have two essays that was in the after week and two presentations. So I think I will be working on the essays and presentations of the week. Yeah, that's what I was thinking as well. I guess we're too young for my youth. Okay. Yeah, maybe this. Hopefully. Um, it's actually still ongoing, but we're having a Q&A session right now. So he didn't really talk much, Jin Chun. He emphasized more about, because, yeah, and LLC. No? Okay. Yeah, so it's OECD, AIB, and LC, but then apparently they also have guests from other countries. So there's the foreign minister from Singapore, I think, the guy with the very long surname, and another Russian person. But yeah, he was distinguishing AIB's mission because when we talk about AIB, we think about infrastructure. And then he was saying how because of COVID, there was a shift of focus from the physical infrastructure to social infrastructure. So he was saying how because during COVID, no one is going to train stations, to airports, so these physical infrastructures are not useful. Investment in physical infrastructures are not useful unless we give priority to social infrastructure like that, because it is healthcare that was affected by COVID. So he thinks that the AIB should emphasize more on social infrastructure as opposed to physical infrastructure. Yeah, he only spoke for like 15 minutes. Not a lot of content, but like. Oh yeah. It's just a picture. About the readings. Well, to be honest, I don't think I have done much research recently because I haven't had much time. Um, but I downloaded the AIB's what do you call that, corporate strategy, and kind of skimmed through that. And for the regions where they operate, I found a section on the website where they have a list of all the approved projects and the pending objects, and I was putting them into an Excel file to map out like the spatial spread of their investments. But I wasn't finished with that. So I think I'm quite confident so far. But I think I'll be listening mostly to what you guys will be talking. this is quite detailed. I think this will give us a good picture of the situation before COVID. So maybe we could use this data as like a, yeah, to give us a picture. Yeah. Yeah. Yeah, yeah. Definitely. I mean, in a way, I think in a way it's quite also complex for us because, I mean, if there's different forecastings, then there's different solutions and different answers. So when we give the presentation, I mean, I'm not sure if they want us to give one solution, like one comprehensive solution, or should we give them like different scenarios, different answers, and then let them, So I think this is the difficult part. Oh yeah, because it's still going on, right? And like in the readings last week before we had Robert, the OECD paper was talking about diversifying the risk. So factories, industries should have different suppliers, should have a lot of diversified suppliers. But then in the conference that they were in talking about, one of the Indian person, he was saying that the opposite is quite is happening because of diversifying multilateral organizations from around the world, then it's harder for industries to bounce back because it's actually better if there's one hegemonic organization that could share burden for industries. For example, loan defaults, etc. It's more efficient if there's one hegemonic multilateral organization as opposed to having a lot of different organizations to diversify the risk. So he was like saying the opposite thing. Yeah. I think he's taking the more protectionist approach. Yeah. I think they're still in the seminar maybe. They're in the same seminar before this. Which courses are you taking? Yeah. Pure industry, yeah. With Paul? With Paul Wood? Ah, okay. Ah, okay. That's really cool. I'm taking the pure industry concepts of molecular economy, and the philosophy of work. He's the guy who knows the Dragon Convention, the guy who is speaking, the head of the department. He can hold it down. Yeah. By the time it's 2:30, they should be finished up too, because the last time when we met with Robert, they were with us, right? Asking oh.
You can try to speak to okay. Sovereign-backed and non-sovereign-backed financing to ongoing operations. And I think here's the document address. Or you can send it to the Some project list, a whole list, which is John C has listed. Okay. Thank you.
Is it the project list where it says approved and pending projects?
And ongoing projects.
Okay. I saw that page as well yesterday, and I was trying to kind of put it in an Excel. Okay.
Read some reports from the WTO and OECD. I think it's not so related to the AIIB for this, but I just want to take a look at what's happening in the world during the pandemic. And I think most of their reports are talking about their passport restrictions and the difficulties in shipping those products, the cross products, and something like that. And also, I think most of the organizations are put much emphasis on the emergence of the e-commerce during this pandemic. and parcel trade. And I think they also propose that, like in the future, maybe countries should invest more on the logistics service, like the express service, and also the ICTs related to the online shopping, because I think they kind of think that nowadays there may be a shift from the